Hello, my name is Eddie Topic. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here are your daily technicals for Friday, the 26th of February 2021. Looking at Eurodollar first. An unusual possible bear spike yesterday, but with issues. In recent days, the market has ridden up over the highlighted congestion combination made up of the flatlining short medium moving average, currently 121.55, the key March 2018 low at 121.52, and most importantly in this instance, the neckline of the possible reverse head and shoulders formation, currently at 121.62, constructed over this year so far. In addition, what happened specifically yesterday was a sharp move up over the important April low at 122.12, and that is where the issues lie. Doing this would look like a bona fide attempt to break higher from the proposed reverse head and shoulders formation, something you would expect. However, the move up was tempered towards the end of the session as prices dropped back down below the 122.12 level and barely closed over the neckline, hence the idea of a possible bear spike. Maybe even a shooting star pattern type 1, bearish. However, please note prices still close reasonably over the neckline, so even now may be the beginning of a break upwards, admittedly one that hasn't started that well. As I've said over the last few days, overall there's a lot going on here. The descending wedge pattern is still live with potential upside target X in the 123.48 area, plus we might also have a preliminary target X2 in the 122.95 area for the prospective reverse head and shoulders pattern, though this, as I've already mentioned, is by no means certain as yet. So far today, a big dip lower below all the support listed above, but as they are all fairly closely grouped, pushing through wasn't that big a move. We are down now looking at the short moving average below, currently at 120.99. However, the next significant support will be the rising medium moving average, currently 120.27. But all this action puts target X and target X2 now on ice. Cable, aka sterling against the US dollar. A bearish black crow yesterday, as it seems the market was A, not comfortable in testing the March 2018 high at 142.43, and B, unhappy to stray too far away from the comfort of the support of middle time, currently 138.98, of the important late June to late September 2020 bullish shift pitchfork. This pitchfork has shown the bullish angle of attack since November last year. Below this middle time we have support from the recent congestions at 138.15 and in a band 137.50 to 136.50. So far today, a further decline right down to the middle time, where we have held so far. The next chart to look at is Euro Sterling. A bullish white soldier yesterday and a follow-on high from the previous session's bull hammer action. The last 3 days look increasingly like a possible spike bottom and the end of attempts to reach the full potential targets below target X2 for the head and shoulders top in the 85.15 area and target X1, the target for the recent sideways triangle. Let's wait and see. But so far today, a further small move higher, that is until we reach the rapidly declining short moving average, currently at 87.12. Normally I would not credit this moving average with much, however since mid-January we've seen this short moving average acting as a proxy for a downtrend. So what happens here will be interesting. We also have very recent congestion overhead at 87.70 and 88.5. One final thought. There's an opportunity that if we see a further small rise and high close, that we might have a weekly key reversal up. Here, just keep an eye on that one. US dollar against the Indian rupee. It seems the recent downward pressure upon the congestion of support below from the September 2019 high at 72.41, the November 2019 high at 72.24, the January 2020 high at 72.13, and the February 2020 high at 72.05 have eroded the bearish incentive, much as I suggested in recent days, causing second thoughts and a big bullish white soldier yesterday. which punched up through and closed over two key resistances noted in recent days. The short moving average currently at 72.72 and the 50% Fibonacci line of the July 19 to April 2020 move at 72.64. This move up now challenges the big multi-point early November 2020 to date downtrend, currently at 72.78. So far today, never underestimate the power of an unleashed force. A fantastic gapping move higher through all sorts of resistance, such that we've ended up right now seemingly holding for a bit at the long moving average, currently at 74.04. We're on the last trading day of the month, and we're not only on for a weekly key reversal up, but also a monthly key reversal up here as well for February. Beyond this, on the upside, we have the 50% Fibonacci line of the February to April 2020 move at 74.26. It's only one word: caution. US dollar against the Brazilian real. An interesting bullish white soldier yesterday on its own, but if you look at the last 2 days, you will see that it's a 2-day bullish separating lines pattern. Additionally, this adds further weight to the argument I've put forward that we may have an ascending triangle formation in the offing. This triangle is formed from the combination of the January 2021 high at 51.59, the mid-November 2020 high at 52.57, and the lesser Fibonacci level, specifically at 52.91. It is still too early to start naming any potential targets topside or below, but keep an eye on this idea, especially as we closed right on the lesser Fibonacci level last night. US dollar against the Mexican peso. A countering bullish white soldier yesterday, a reaction to the last 2 days' bearishness, I suppose. It was nevertheless a new 2021 high, as well as breaking up through the top of a small bull channel currently at 20.8905 before closing back down within it. The halt in the rise was caused by the market approaching the now flatlining long moving average above, currently at 21.1744. So far today, another small attempt higher over the upper bull channel line, but again limited, as if the market almost senses the proximity of the long moving average overhead. ICE Brent crude oil futures. A limited follow-on high yesterday to the previous session's bullish engulfing pattern, ultimately ending up as an indecisive spinning top pattern right at the top of the recent market. Not what the bulls out there would necessarily like to see, I guess. As I've pointed out for quite a few days now, we seem to be in a fairly free territory topside. So why did we suddenly seem to be turning volte-face? I suspect the reason may be because 67.68 is a Gann number, which could explain why we stopped here. Nevertheless, it was a second consecutive close over the key April 2019 to date downtrend, currently at 65.58. This downtrend had capped the market last week and earlier this week on a closing basis. It would seem reasonable to see this as the first line of support, now below. So far today, a drop from the open, looking perhaps like a possible bearish hanging man pattern today, though it is still early as yet. And I think that we've seen the market move down now to some support, specifically April 2019 to date downtrend. That would be the next really key level, and that's currently running through at about 65.60. ICE gas oil futures. A limited follow-on high yesterday to the previous session's bullish engulfing pattern. However, the bullish connotations from the move higher were tainted, not because it was just a bearish black crow, no. It was because this bearish black crow made it a 2-day, or rather day 2 in a 2-day meeting lines pattern. Now, meeting lines patterns are traditionally seen as bearish, and this one is appropriate for that. However, the data suggests they have a high chance of also being bullish. So this is worth paying close attention to, especially the outcome in the next few days. One further item. I pointed out previously that the next seemingly significant overhead resistance of note is the 50% Fibonacci line of the venerable June 2014 to April 2020 move at 562.75. This 50% Fibonacci line is also the gateway to some congestion resistance between 562 3/4 and 596.5 that dates from September to December 2019. So you can see why it would be a little surprising that the market halted and turned at 548 after making a new recent high. I then realized that 549, only $1 higher, is a Gann number. This would explain the reason for the turnaround, and one worth remembering. So far today, a lower open and a further move down to a lesser Fibonacci level at 534.25, and the February 2020 high at 523.75 is the next significant support below. UK FTSE futures. A new high for the week yesterday, but also an indecisive spinning top as well. The base of the day's action was once more the June 2020 high at 65.12, though it was by inference rather than reality, as it wasn't touched yesterday. The cap on the overhead action was once again the 2021 downtrend, currently at 67.01. Meanwhile below, we still have support on a closing basis from the short stroke medium moving average, currently at 65.75. Finally, and contrary to this seemingly hidden bullish tendency, there's still a hint, just a hint, that we may have a head and shoulders type action building up from the November 2020 to date business that we've seen so far. No more than that right now, but moving up as we have done yesterday doesn't help the scenario. So far today, a much lower opening below the short stroke medium moving average, but still just above the June 2020 high. At this time it seems that once again the June 2020 high is the base of the action. German DAX futures. A combined outside day and bearish dark cloud cover pattern yesterday. The market managed to penetrate all three nearby supports of the important rising neckline, currently at 13.883, with a ragged late September 2020 to date reverse head and shoulders pattern, the February 2020 high at 13.821, and the short medium moving average, currently 13.782. However, prices failed to close below any of them, managing to close just over the neckline. So far today, a much lower opening and a dip to a fresh low for the last 2 and a bit weeks. However, prices have recovered such that we are currently just under the February 2020 high and the neckline. Meanwhile below we have the slowly rising medium moving average, currently at 13.356, still approaching the market. US E-mini S&P futures. An immediate countering combined key reversal down and bearish engulfing pattern yesterday. Quite a large one. This was after the previous session's bearish engulfing pattern. It also failed the idea that the prior 3 days may have been a bullish morning doji star pattern. Prices dropped down through the middle time below, which is currently at 38.90. Yes, we're still below that. Of the late December 2020, very early February 2021 bullish Andrews pitchfork, as well as the important January 2021 high at 38.62. They finally halted the next significant support below, and that's the rising short stroke medium moving average, currently at 38.15, closing a little above. So far today, a lower opening and piercing of the short stroke medium moving average, though not by much, and prices have pulled back up right now to the open of the day. French CAC 40 futures. A new recent high yesterday, the highest since February 2020, but also a combined outside day and possible bearish hanging man pattern. Additionally, despite this new high, the market nevertheless closed back down below the one consistent feature here since November last year, the previously oft highlighted overhead upper bull channel line, currently at 57.99, of the big May 2020 to date broken bull channel. This line has been capping the rise since last November, even after it has been broken. Overall, we are still in between the overhead middle time, currently at 59.20, and the lower time below, currently at 56.38 of the December 2020 to January 2021 bullish Andrews pitchfork. Now, so far today, a gapping lower open, but since then a recovery back into yesterday's range. LME 3-month copper. A new recent high yesterday, but also a significant bearish harami as well. It makes a change from the prior 14 bullish white soldiers. I've mentioned before how this market is in fairly free territory here, bar some congestions, until the $10,000 level. I pointed out how it pays to watch these congestions nearby at 91.60, 93.05 and 96.05, which is why yesterday's failure at 96.05 congestion was so important, as was the low yesterday at just over 93.05. So far today, a significantly lower open. Following down from yesterday's bearish harami, we've seen prices drop down through the next two significant congestions at 93.05 and 91.60 so far. We really do not have that much support nearby. There are congestions at 87.66 and 86.98, but only bigger supports at the combination of the recent 50% Fibonacci line and April 2020 high at 86.61. LME 3-month aluminium. A second bullish white soldier and bullish opening Mariposa yesterday followed on from the previous session's immediate countering bullish engulfing pattern. Interestingly, the rise was arrested by the lesser 61.8% Fibonacci line of the big old 2018-2020 move at 22.36. Not a place I would have really thought worthy of halting, but that is what it is. So far today, a very interesting move. A big drop down to the next significant support, the August 2018 high at 21.78, before a not so big pullback up. I have a concern that this market may form a possible bearish, well, let's say hanging man pattern for the moment, possibly bearish, if it lingers around these current levels. Thank you for listening. This short version broadcasts essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast at the end. And here is the final bit.